I didn't know how to kind of raise money. I always thought I had to do stuff all with my own money. And that's when I kind of realized, hey, if I partner up with the right people, go to the right private lenders, go to the right banks, even local banks and whatnot, things were a lot easier than what I originally thought they would be. And then, from there, that's kind of what started off going from the fix and flip to turnkey to now just acquiring rental properties, really.
Hey.
Did we just do this?
Here we are.
My name's Mark.
Adam Rear here.
My name's Mark Molly, by the way.
How y'all doing?
How you doing?
I doing great.
There's nobody out there yet.
Hey, here it is. Today's the day. Today's the day. First podcast episode. Here it is.
Only took us a few days and many, many hours of figuring stuff out.
Here we are.
But we did it.
Yeah.
Congrats, buddy.
Yeah.
Fact.
Hey, there it is. Cheers. Cheers to us. We made it. Today, I think we should talk about a little intro. Who we are, what we do, how we got started. Lead us off, Mark. How did you get started?
It's none of your business.
Okay. All right. Let's go ahead. Next question.
Next question. Good question. So my dad was a real estate developer back in the day out of Wahoo, Nebraska.
Wahoo, Nebraska. Okay.
Yeah, big.
It's bumfuck nowhere, and then drive another 20 minutes, and then you end up...
Big city, but they used to have one stoplight, but they ended up taking it out a few years ago, so...
Oh. Yeah. Traffic circle? Did they go to the traffic circle? No.
There wasn't no traffic at all.
Didn't even go with a stop sign, huh? They just passed on by.
Yeah, dude, it was, detrimental, but... he was always into custom home building growing up, built some townhouses, a little development of townhouses, and in high school would work with him in the summertime. And from there, just kind of learned a little bit of the ropes. He didn't teach me a ton on the investment side, but on the work side, learned quite a bit. And then from there, my grandma passed away, Grandma Matson, and we inherited a house from her, me and my brothers. I was 16 at the time, and inherited a house from her, cleaned it up a little bit, sold it, made a little bit of money, and then me and my brother, one of my older brothers in college, ended up buying a house together that we flipped up in Lincoln. I say we flipped it. We messed up on it, didn't know what we're doing. And he ended up having to buy it because we couldn't sell it on the market.
Your dad bought it?
No, my brother bought it.
Oh, your brother bought it.
Yeah,
okay.
It ended up working out fairly okay-ish at the time, just because I think he was living in an apartment, just had a kid, or kid was on the way, and the house wasn't selling, so it was kind of a good transition for him to move into the house. But he ended up buying it. We made zero money on it. Only thing I got out of it was a bunch of really nice tools, because we spent a bunch of money on brand new tools, because we did all the rehab ourselves. Or I should say I did the rehab. My brother pretended he did some, but he didn't know shit. He still doesn't. But it was a really good learning lesson. Learned a lot of stuff from it, do's, don'ts, whatnot. It was a good first learning experience for sure.
And you basically redid his house for free for him, so hell yeah, man.
Or less, yeah. The quality of work.
What a good brother, man.
I don't think the quality of work was there.
Hey.
Cabinets after a few years fell off the wall, and it was good though. That's what he deserved. He deserved it really nice.
Hey, he had a few good years out of it.
Falling cabinets.
Yeah.
But again, another great learning lesson from there. And then shortly after that, moved down to Arizona. That's where my dad kind of semi-retired to. The boom was going on, and he was just buying properties, not doing anything to them, selling them 2 weeks later, making 40, 50 grand on them. And I was like, oh, that sounds amazing. So before I proceed in college more, I was in college for about a year and a half or so at that point. Before I proceeded more, I was like, hey, let me try this real estate thing more full time before I do college.
And you were going to school to be a doctor at that point, right? Yeah.
I'm school for a doctor for no reason whatsoever on what they call it in high school when you meet with your counselor before you graduate to kind of come up with a career idea or your next path forward. Can't remember what it's called, but
career counseling. career counseling. Yeah. Yeah. Hey, there you go. There it is.
Here it is. But
They told you, hey, you be a doctor.
yeah, I told
You like touching people? There you go.
that's the place for me. Yeah. Oh no, I legit Googled. This is when, I don't know if Google was a thing back then. Maybe it's like Yahoo or Lycos. Lycos, I think, was a search engine for a while.
Oh, man.
It fully to me.
Yeah, that does. Yeah. If you want to talk about that, we won't go there. All right.
I did a quick search to find out the highest paid profession, and it was an anesthesiologist. So I was like, dude, I'm going to be an anesthesiologist.
Yeah.
For no reason whatsoever.
Sure.
So I went to college, took a bunch of science classes, spent a lot of time studying to get good grades, and yeah, it sucked. Didn't want to do it. Wanted out, so going down to Arizona was a good excuse. Had my girlfriend at the time, wife now, but was dating her since we were babies, more or less. Convinced her to go down to Arizona with me, and went to Arizona, got into real estate full time. Got my real estate license right away, started doing mortgages. Got my real estate license right away, wasn't doing a lot of stuff with my license, but got into mortgages right away.
Mm-hmm.
And from there, yeah, started doing a bunch of mortgages. That was a time where you had, if you could breathe, you could get a loan for as much as you want.
Yeah.
Like no doc loans where you legit filled out an application, and with that application, they would give you a loan on a house. And I think down payment requirements were like maybe 5%. I know they had some 100% programs back then as well, but it was easy to give loans or to get loans, to get business in and do it. So got into that, but then within a few years is when, it was like 2008-ish or so, when shit hit the fan and just saw an entire business collapse. And there was 3 or 4 days we were sitting in the office at the mortgage office, and we would just watch TV pretty much the entire day. We're at the office, and the TV we're watching is the news on what banks were going under, as like Bear Stearns and Lehman Brothers and others.
Yeah.
And those are some of the banks that you were selling, because we were mortgage brokers.
Yeah. Yeah, absolutely.
We were selling our loans to. So it's like, hey, we have 10 loans with Bear Stearns. We have 5 loans with Homecomings Financial and some others. And it's like, hey, these guys just went out of business. These guys went out of business. And it's just, you're seeing instant paychecks go away that you were kind of banking on making. So, yeah, at that time, transitioned to doing agency stuff with the license, and start doing a bunch of short sales, build up a team, and crank through short sales, helping out a lot of people.
Tell us what a short sale is in case people aren't aware of it.
Good question. So it's when a homeowner owes more on their house than what it's worth, and they want to sell it. So we would go to the bank and we negotiate on their behalf, saying, hey, they owe $300,000 on a house. This house is worth $100,000. Let's allow them to sell it for $100,000. You guys will at least get some money back. You won't have to foreclose on it, and the homeowner can move on. You guys can both move on. So we would list the house for the owners. We would negotiate with the banks. That process could take anywhere from 2 to 3 months to, we've had some that took 1.5 years, 2 years to do. So start doing a pretty good volume of short sales, and through that process is when I started to acquire some investments. Through that, we would buy properties through short sale, and I started doing fix and flips at that time with my dad's help, and then we had a money partner as well. And so I did one with my dad, and then after that I had a buddy from Nebraska that wanted to invest some money, so we went in 50-50, where all he did was lend money, and I would find the deals, coordinate all the rehab, sell it, everything.
Mm-hmm.
And looking back on it, it's a shitty deal. He got 50% of the profits for not doing anything besides having money in deep pockets.
Yeah.
But it's a good way to get started. You gotta get started somehow, you know.
Sure.
So we started doing that, but then I started getting more into investments, started getting some of my own money, started buying some of my own stuff. And then that's really where I started getting deeper and deeper in investments, realizing this is what I enjoyed a lot more than being a real estate agent. And by that time, market was turning around a bit. Short sales weren't as prevalent. Things were slowing down a little bit, and the team I had built was transitioning more to traditional agency business, helping retail buyers, retail sellers sell, and do that just was not my jam whatsoever.
Yeah, makes sense.
Nothing against realtors. Realtors can be a different breed of people to deal with.
Sure.
And some of the clients and whatnot, I just enjoyed investing so much more at that point. So
Everything's in your control at that point, right? You're not subjected to somebody else finding the deal, negotiating, somebody in the middle, all of those things, right?
a lot less complicated for sure.
Yeah, 100%.
Yeah. So at that time, over the holiday season between like Thanksgiving and Christmas, I try to slow down with the business, spend more time with now wife and family, and just kind of reflect on stuff, and just kind of came to a realization. It's like, dude, everything was good. Business was still good. Money was great. Like things were good. But it's like that, just not what I thought it would be at this time. Like when I got to that point, is more ego driven. It's like, oh, do I want to build a big team? I want to make all this money, and then stuff comes to fruition, and it's totally not like what you expect. And to me, that was a realization. It's like, wow, I thought this is exactly what I wanted, but now I'm here. It's like, it's not. So after that break, I just kind of went back and it's like, hey, this is not for me. I don't want to keep pursuing this. I'd rather get in investments full time. So, and this was all down in Arizona. So I continued to do some fix and flips, got some rentals, and then probably 4 years ago now or so, decided to cash out of Arizona and invest all back in Nebraska. And then back in Nebraska is kind of where I met you through a mutual acquaintance. Started doing turnkeys, where I would find a property, fix it up, get a tenant in there, get property management in place, and sell it to a guy like you that was out of state looking for better returns than what he could get where he's at. And I started selling a lot of properties that way. And then after a while, I just realized, why am I selling all these? I'm putting all this work in these deals, getting tenants in there. These are great deals I'm selling off. Why am I selling them off? And
hey, we appreciated it, man. Hey, great opportunity to pick these puppies up, man.
So I told like to you and a couple of your buddies that in your circle, it's like, dude, what am I doing right now? This is stupid.
Yeah.
But at that point, I didn't know how to.
I still have that house, by the way. Yeah. It's done well.
Yeah, it's been many years now. I didn't know how to kind of raise money. I always thought I had to do stuff all with my own money. And that's when I kind of realized, hey, if I partner up with the right people, go to the right private lenders, go to the right banks, even local banks and whatnot, things were a lot easier than what I originally thought they would be. And then from there, that's kind of what started off, just going from the fix and flip to turnkey to now just acquiring rental properties, really.
Yeah, interesting, man.
That's my story, bud.
And back to the first property that you had flipped, how much did you make on that?
On average, I'd say in Arizona, if we're not talking about the Nebraska one,
the first one that you did, first ever one.
So the one when I was 16, I think each of us made maybe 10 grand-ish or so.
Each person? Yeah, that's...
Because it was me, I have two older brothers. We inherited a house, all three of us.
Mm-hmm.
I think it was maybe around 10 grand, maybe it's 5 grand. Whatever it was at that time, it was
very impactful. Yeah,
chunk of money.
Yeah,
being 16 years old.
Yeah,
and that's what really got me addicted. And then from there, again, that college one didn't make shit. And then Arizona finally started to kind of learn and get some traction and start to make some money.
Yeah, start to figure out the business, and you're like, all right, now I operate this thing as a business rather than just a kind of hobby on the side.
Yeah, and the goal is to make money. It's like when you start making money, it's like, oh, this is cool for once. Instead of losing money or breaking even, it's like, hey, I'm actually making some money on it.
Yeah, absolutely. Isn't that what it's all about? It's supposed to be, right? Yeah,
that's what I hear.
Interesting. Okay.
What about you, bud?
Really? Yeah. Okay. Well, here we are. This is what we're talking about.
Podcast, I get.
All right.
Ask each other questions.
For me, man, I was thinking about this. It goes all the way back to I would do walks with my mom around the neighborhood all the time, and I'd be walking around, and there's like our house. We were in a nice neighborhood, but we were, probably the shittiest house on, a really nice neighborhood or whatever. So I'd always look at the other houses and say, like, man, what do these people do? What do these people do? How did they get to that point?
For sure.
And far too often, somebody would just come, like my mom would say, oh, they're in commercial real estate. I'm like, what does that mean? I don't know. I'm 8 years old and just walking around and like, oh man, well, I want to, know more about this. How do these people keep doing this? And as I continued to grow and become more knowledgeable, just continued to fascinate me, and just was realizing that this is where I wanted to do. This is what, where I wanted to invest my money. It's better return stock market, more control of my money, everything all around it. So I started reading books. And then, with all things that you learn, you got to just dive in. You got to just, throw everything into the fire, and that's how the best way to learn. At least for me, I want to have a baseline knowledge of some form or fashion, whether that's you talk to people, you read books, you go on Google, you read articles, whatever it is, whatever the topic is. But no matter what, you have to dive in. You have to just get your feet wet and just learn through doing.
Absolutely.
So that's when, at that point, we had connected through our mutual friend, one of my closest friends growing up.
Gus.
Yeah, Gus, man.
Lusky.
Yeah. Gus, also Lusky, Longshanks. And in the end, you were selling basically,
turnkey
rentals or whatever. Okay. All right. Bought it for, house was $63K. Omaha, Nebraska.
Never saw that.
Nothing. Yeah, nothing that I could ever find in California like that. Even a 3-wide trailer is going for $300K at that time. It's probably more at this point. But
how much did that thing rent for when you bought it? You remember?
It was renting for probably like $900, something like that.
All right.
And I was cash flowing more. I got a mortgage on it, so I put $15K down, got a mortgage for the remaining $50, and then was cash flowing at probably $400 a month.
Yeah, that's killer.
So just absolutely crushing it from, oh, this is great. This is, wonderful. There's a property manager out there working on this. And there's been some hiccups along the way, mainly around just management of the property and not being there to see it, and all of those challenges that at some point we'll talk about, just challenges with external property manager, why we have everything internal now.
That's a whole episode for sure.
Yeah, 100%, 100%. But anyway, so that property now just appraised at $140K. Still own it. That was 2017. So over doubled in value over the last 5 years.
So between the cash flow and tax benefits, you really haven't done anything to that. You've worked on the property, like rehab the property, not you yourself.
Yeah.
That's been really passive for you, and that's a chunk of money. It's in that amount of time.
Great. Yeah, absolutely. And so it got my feet wet. It got, us connected or whatever, but really just I started to learn the process. And even just the process of buying a property is something that, in my opinion, should be taught in school.
Absolutely.
I don't want to learn about Mediterranean history of the 1800s. I want to learn, how do I buy a house? How do I support my family? How do I, make my life better? And through real estate would be one of those. And buying a house is what most people do at some point in their life. So why you would not teach that is beyond me. Yeah. Anyway,
another episode.
Yeah, another episode. But, nonetheless, it got my feet wet, and eventually, continued to stay very interested in real estate. And then we stayed connected over those next couple years. And then we were having a long conversation one day about, I'm interested to go into multifamily. You were interested to jump from single family into multifamily. And so both of us dove head deep into multifamily, picked up 12-unit building and a 14-unit building in one swoop. And then that year, that was in 2019, we then bought a 12-unit, and then we bought a 24-unit, all in 2019. So 62 doors in 1 year, going from What I had was one door before that.
Yeah.
So quite a jump and quite exciting during that time. And then, from there we continued to optimize. We turned a bunch of those units, picked up a couple properties that were in rough shape. But in the end,
Put it nicely.
yeah, we put it nicely. But great price we picked it up at, turned them.
Yeah.
I flipped that other one, 29th Street, for about 100% gain from what we had bought it at.
Yeah.
So, quite a turnaround in, I guess that was 1.5 year period.
Yeah.
So from there, ended up going to continue to grow our portfolio and jumped into opening up the fund in 2021, Cherrypick Capital. And really the idea there was that we wanted to scale, knew we wanted to pull in outside, investment to be able to continue down that path of growing our portfolio. But also the other piece of that's important is to be able to help friends, family, other folks that don't have access to the deals that we're finding.
Yeah.
You talk about real estate, you talk about stocks. It's so easy to go and buy. I could buy Apple stock on my phone today. I can't go buy a property through my phone, a piece of a share or whatever.
Yeah.
And so I think the progression is natural to kind of continue that way. But I think the fund in general and funds are really the way to be able to get people together and go buy something bigger and scale. So to me, that was, what we had talked about as far as Cherrypick. I don't know if you want to add anything into.
Yeah, no, I would say when we bought those first apartments, we were raising money at that time from friends and family, but
That's true.
Definitely handshake type deals. We had some paperwork in place with some people.
Yeah.
Some just, hey, you know me, handshake. This is what we're gonna do, and we pulled through on what we said we're gonna do. But
yeah,
like you're saying, to really scale up, you can't scale up doing handshake types of deals with people. You can with a certain inner circle that you have, but to really get your shit together and scale up, you need to form a fund and be able to raise money the right way per SEC guidelines and whatnot.
Yeah, absolutely. Good point. And so from that, picked up 48 unit property in Fort Madison, Iowa.
Yeah.
Tiny little town in Iowa, incredible returns. And we got our feet wet in Iowa after realizing that a lot of people were migrating into Omaha. Omaha was becoming more saturated. Yeah. We'll do another episode on why we like the Midwest and why we think Omaha and Iowa are sexy places to invest.
Sexy, boring places.
Yeah, exactly. But isn't that the sexiest part? It's boring and steady and cash flows.
Yeah.
So ended up in Fort Madison, Iowa, a beautiful little town, and now acquiring a 94 unit package in Des Moines under Cherrypick Capital. And so just seeing that progression and that scale is exciting. It's fun to see, and excited to see where the future holds for us.
Yeah, it's what you said earlier. You just gotta go out and do it. There's so many people that's analysis paralysis, just don't do anything. They'll study, listen to 100 podcasts, read 100 books, go to a bunch of seminars, spend a bunch of money, and just not do anything. And what you said earlier about when we bought our first apartment, at that time I had a pretty good sized single family rental portfolio.
Yeah. How many was that?
It was north of 100 at that time.
Yeah.
So
that's a lot to manage. All of those individual doors, all those different locations.
It's a lot. And I thought I had my shit together. And it's like, I'm going and buying this 12 units. Easy peasy. And it wasn't. There was definitely learning lessons, even buying a small 12 unit apartment complex that was completely different than single family. But I could have read we both studied a bunch of stuff on multifamily. Yeah. Knew a bunch of people in multifamily space. We both thought we knew a lot, and we did. But until you actually get into it and you do it, you don't fully know. And that's, to me, that's the biggest, fastest way to learn, is actually taking action and doing it. So I do got to commend you a bit. I don't want to give you too much praise ever. Okay.
I will take it. This is the one and only. Here we go, guys.
This is it. First time ever. For you having a full-time job, though, and like taking that first step to actually take action and buy property, because again, very few people do that. And I still talk to, I'm sure you do now too, talk to a lot of people about, hey, they want to get in real estate, want to find out more about what you do, things like that. And sometimes you'll have those conversations with people for years and they just don't do anything. So biggest thing I would say is just do something.
Yeah.
Send out marketing material, do networking, find partners, do something to get your feet wet, to get your first deal in place. And after that, you start to learn a lot, and it gets a lot more, it gets more comfortable, I should say. It gets more comfortable, gives you confidence to kind of go and do another deal. And then things will, if you keep at it, things definitely will eventually snowball.
Yeah, absolutely. And taking action, that could be whether that's, go out and buy your own property, or, invest with people. I mean, like us, right? Hey, invest in folks like us, or, go buy your property. I mean, whatever route you really want, analyze it, really figure out that, hey, I want to be more of an active investor. I want to go out and, understand the process, go buy something. And awesome, more power to you. Both of us would be first to provide any help, guidance, advice, any of the above. But if you want more of a passive investment, look for more people that you can invest with, and have other people that are carrying kind of the workload with it. But that's what's great about real estate. You end up with partnerships all over the place, that it could be any form or fashion.
Absolutely.
So if that's the route that you're interested in real estate, just take a jump.
Do something,
Yeah.
Do something.